Hello and namaste. This is Neeraj here once again. Welcome back to my channel Financial Market Analysis Twist by Neeraj Shah. So in today's video, I would like to give you some update regarding markets, stock markets, commodities, metals, weather, and how it's all interrelated. And also I will give some principles of what do you call it, to keep in mind always, which are universal principles in the sense, irrespective of the situation and irrespective of the time period, it is applicable. It applies to all the situation, all the times, everywhere. Those principles, and also, before starting, I would just inform that I had 1 year before I had come out with this Godavari power kind of I had given this recommendation regarding. So now I am in this I would like to declare also, I am telling people or my subscribers who have paid to me, and now into general everyone, that if you take a risk reward ratio into mind, so from this point onwards, from here onwards, that risk reward in, say, Godavari, Sarda, those kind of stocks is high, in the sense that that reward is not so much. I don't see much upside. There may be something, but this is my view. What I understand is that if you look at, say, Godavari Power, a typical stock, it from 100 rupees around, when we had come out with a recommendation in April, I think in April, around April, May, and in April, May, and 2020, and this is it has gone up more than 6 times. So it's 6 times it has become. So I am now telling, I have if I have declared about that premium video also, in which I have discussed in detail fundamental and full futuristic analysis, and also the projections for the next 2 years. I have full total detailed analysis given about that stock idea, specific multi-bagger stock idea, so which I am pushing that stock idea, and I am telling that it is time to move from, say, Godavari and to switch to that stock, because risk reward, particularly if you compare to the stocks, is risk reward is much more higher in that premium video which I have come out with that stock, and that is available only for a very nominal charge of ₹1,000 only. I have kept it minimum for the benefit of the large number of retail investors. So you can, if you want to know about that particular video or that particular stock, you please look at my description box below. Down I have given my email and all my details are there. Once you send me this mail, I will give you the bank account details. You can transfer, and I can send you that personalized link of the detailed analysis of that particular stock. So having said that, and also, if you have not yet subscribed to my channel, you please subscribe and keep on watching, because I come out with the different unique ideas and concepts, and which helps in everyday financial life also. So keep watching it, keep sharing it, and keep subscribing it. God be always with you, and Goddess Lakshmi be always with every one of us. That's all, only my wish. So what I want to tell you is that in last week you would have seen that markets was in a bit of a slump, in the sense it's not but it's a consolidation phase, you can say, and particularly that the metal stocks were particularly outperforming compared to the markets, but still it is not moving much. So that worry about everybody is talking in the full world is about that bond yields are rising, so interest rates will rise, central banks all over the world will come out and tightening the screws, in the sense that they will raise the interest rates and so on, and because inflation is rising. So let me tell you very clearly what is my view regarding this, is that this inflation is supply side inflation. It is nothing to do with demand side inflation, and there is still a lot of supply disruptions, as I keep on telling to everyone, that there is a lot of supply disruptions because of this COVID pandemic. Still these shipping lines are not fully operational, then travel is not fully regular, Then there is a minings are not fully in Brazil, South Africa, and only most of these mines are not fully operational. So having all said done, this is more of a supply side pressure, and even though demand is also coming up nicely, but it is still not that way that it can hurt that inflation. It can put inflationary pressure. So having said that, I can still reiterate that so no, particularly US Fed is not going to increase any rates, come what may. That is what they have made this stance. So money will keep on coming. Okay, they are not going to increase rates, even though government of USA may increase tax, as we had come out in March video, in April 2020 video, that the US will have no other option but to increase tax to fund all this stimulus. So even though that may hurt US economy, okay, if increase of tax, but those investors or this money which maximum comes from the USA and Europe, that will flow towards emerging markets and the booming markets like India, Korea, this kind of markets. Okay, so sitting in India, Indian stock market is not going to hurt at all. It's, in fact, it will be the market of last resort, what I call it is at. Everything will be channeled to India. So even though tax rates rises in USA, don't worry. Those money will be transferred to India. People will switch from that market, US market, and come to India and invest in Indian market. And US Fed is not going to hurt by increasing rates, come what may. They have already made this stance clear. And you will say that already COVID is again coming back in second wave and third wave in some of the countries, and it's starting to hurt again this. So I don't think so that any government is stupid enough to screw this recovery, which is still not yet fully in phase, so by increasing the rates. And so is the case with India also. I don't think so that by increasing interest rates, you can control the inflation. That is a bullshit kind of a theory which I don't subscribe to. So I think here in India also, that in most of the world, although I would like to tell that in Russia, in recently on the Saturday, that meeting of their central bank was there on 20th of February, and they increased rates by 25 bips. So now the central bank interest rate is 4.5%. But that is a different case, because in Russia, inflation had gone up and all the prices had gone up very much. And although and also this government had never intervened in a way, Russian governments never gave any stimulus or anything to support economy as such. Okay, so they have reserved all these funds, and they are also going about, because here it's more about money. People have money and they start throwing money. So that inflationary, to control that inflation, they have increased the interest rates here. Okay, but in a country like Russia, with a huge country but no population or very less population, this can be done. But I don't think so this applies to countries like India, where there is a supply side issue. Because if Bombay is closed and Gujarat is closed, but Karnataka is working and Bengal is working, so every state has a different dynamics, and that is where, because of this COVID, they keep on a local level basis, they keep on controlling, or they keep on trying to come out with the new regulations. So that is also hurting the supply side infrastructure, or what you call the supply of the essential goods or normal everything, because factory is in one state, raw material is coming from another state. So another state has a problem of say because of COVID, some kind of restrictions are there, but the manufacturing state doesn't have. But without raw material, it cannot manufacture, and without manufacturing, it cannot supply to the other state. So this is all classical supply side issues in India. It's always about logistics and supply side issue, which can never be tackled by the increasing interest rates. So this is what I just wanted to share, that you can any dip in the market, particularly in the metal stocks. I think it is the best buying opportunity for everyone, because the fundamentals of supply side disruptions still remain, and fundamentals of low interest rates, or that by the forget about bond yields. Bond yields are all the speculators, traders, keep on doing all this trading and speculative activities on the yields. Doesn't represent anything, any reality. So the central banks or the US Fed is not going to increase any rates. So money will keep on coming. And even if they do something, suppose if tax rates, till the time US Fed doesn't do any indication of increase in rates to control inflation, everything is fine, and money will keep on coming to the Indian and the booming markets like India. And also regarding the weather, if you remember 1 month back I had come out with a video on iron ore, coking coal, and in generally about coal and Australian weather and China lunar holidays. So in that I had told that that in Australia generally during this time, April, this March, April is the time where a lot of heavy rains happens, particularly in the New South Wales region of Australia. It's prone to it's a rainy season for them in the southern side of the earth. So as it has come that in last week it had in New South Wales and Sydney region had rains, some of the worst or the heaviest rainfalls and storm, which was once in a 50 years phenomenon, not even once in a 20 years. So that kind of heavy rains has happened, and which is our prediction has come true as such. And this is what is going to hamper the coal mining activities, because 90% of the coal is mined in that particular region of Australia, New South Wales. So coking coal, and this is what it's going to support this coking coal and coal prices for continue to support these prices. And this is what it's going to continue to support because of this raw material pricing pressure. Also the steel prices are going to remain more or less firm, and iron ore prices. So this is what I just wanted to share, this update on regarding all this interest rates and metals and minings and how it's. So this is, and as I told you that regarding risk reward ratio, I don't see much upside as such in this stock like Godavari power. Already 6 times it is up, and what I am now recommending is one another that stock, but it is on a paid basis, which that video is available. As you know, I do a lot of research, my own spend money for getting all this information, go visit. So this requires a lot of time, energy, and resources also. So but for the benefit of all the retail investors, this is my channel, and so that they all make money. So I have kept a very minimal charge of 1,000 rupees per video for that particular stock specific idea. So if anyone is interested, you can please contact me by mail. My details are given in the description box down below. And till that time, I come out with some other update and another ideas. Till that time, love you all, and ciao from Neeraj from Moscow. See you once again with something else.